Hi everyone, welcome to our monthly video post. We are going to be talking about a very interesting topic at this time. We are going to be exploring this existential question, which is, does value investing work in India? All of us constantly debate this particular question, and there's a huge dilemma between this growth and value investing. That's the reason we chose this particular topic for this video post. So before I take more time, let's straight away jump in. So on this question, the key thing to look at is, how does one define value and growth? Because there are a lot of myths around value investing in India. In our view, value is not cigar butt investing approach of picking cheap stocks with no growth potential. That will be value for value's sake, may not be of much use. In our view, I think value is all about an approach of picking growth at a discount, whereas growth strategy is all about buying growth at any price. If you define value this way, then there's a lot of value one can create from value investing in India. That's our experience. Generally, in the initial stage of economic recovery, the liquidity will be very strong, money will be floating all around, and in this particular stage, the market disproportionately rewards growth strategy vis-a-vis value. But when the market matures in the mid part of the cycle, when broader economic growth starts gathering momentum, that's when central bank starts tightening liquidity and money becomes tighter, and that's when market starts shifting from growth to value. We are in a similar stage now. We are already seeing this in the ongoing correction. Expensive stocks are getting beaten down more than value. And that particular trend probably will gather momentum as we go forward. Basically, value or growth both perform in cycles. So the key thing is to stick to a strategy and stay the course, be it value or growth, to get the full potential from the strategy. That's what I would say. We run a deep value strategy fund, and that fund has delivered exceptionally well over the last 17 years. It has delivered north of 20% compounded return over this period. So it's not value just creates value, it creates a huge alpha if you stick to this particular strategy over the long term. Also for value investing, the environment is getting more favorable with the emerging view of mild recession in US. Now let me explain why. For the global markets, now the worry is shifted from inflation to growth. You can see it, all the commodity prices are coming down. The commodity index is cracked. Fertilizer prices are down, metal prices are down, steel, you take, even chip prices are down. So there is an all-round correction in commodity. So with that, one gets a view that probably we have seen the peak of the inflation. The worst of the inflation may be behind. Of course, it may take a little longer time for that to get reflected in the consumer price index because of the lag effect. What it means for the Fed is, for the markets is, very, very likely Fed probably will have a lot more leeway and headroom to go less hawkish in the second half because of this comfort that's coming from the inflation front. So the emerging view is, if Fed is likely to go less hawkish in the second half, then there is a lesser chance or lesser risk of a deeper recession in US, because very, very low chance of Fed going overboard on tightening. Given this emerging view of a mild recession in US, One could probably see this as a very positive trend for India because India is very import intensive and also its economy is more domestic demand driven. So in that kind of a setting, it might probably, I think the mild recession view probably it could turn out to be a good playbook for India. In a way, this is start reflecting in the markets. If you look at the July numbers, Nifty is already up by 3%, and small cap index, BSE small cap index is up by well over 6%. And the broader markets, one has already started witnessing stock specific actions. And the market is already up by about 9% from June lows. If you look at the June low, we are already up, Nifty is already up by 9%. And if you look at the number of stocks that are hitting 52-week highs, they are increasing by the day. So this particular trend is likely to favor bottom-up stock-specific and actions, and as value investors, we are likely to benefit. So with this, let me conclude. Happy value investing, and see you in the next. Thanks for watching this video.